From New York to our TV and radio audiences worldwide, this is Balance of Power, where the world of politics meets the world of business. I'm David Weston. We start once again with the markets today, and they seem to be caught sort of betwixt in between, and Scarlett Fu will explain it all to us. Scarlett?
Yeah, that's right, David. U.S. stocks did open in the red, in contrast with gains we saw in futures before the 9:30 opening bell. Now, we saw the futures contract take a late dive on Friday after the cash markets closed, but it wasn't reflected in the underlying index until today. The gap you can see there is still about 10 points, which, according to our producer, Pete Dioteris, it's pretty rare to see such a wide spread when there isn't an event like the Fed or quadruple witching. But overall, David, even with the S&P mounting a bit of a comeback here, the theme is safety, and it's on the heels of a rising virus count in states like Arizona and California. XLK is the ETF that tracks big cap tech names. These guys are a source of safety and growth. They've got the balance sheet to get through this difficult period, and there's no real let up in demand for their products and services, so their growth is not compromised like other industries. I included Newmont Mining because gold is nearing $1,800 an ounce, a 7-year high. Sovereign yields are also down. The German 30-year yield falling below zero once again today. Now, airlines and cruise companies make up 4 of the 5 worst performers in the S&P 500, so that's the flip side to this move to safety. American will now tap the equity and credit markets for $3.5 billion in new funds. Big carriers, we know, are burning through as much as $45 million daily, with demand still very weak. The flip side to all of this is the bid for stay-at-home stocks. Netflix and Clorox both making record highs, new record highs. Netflix actually extending its gain to 6 straight days. It's the longest this year. Clorox, I just checked, up 42% in 2020, David, even though it trades at 32 times earnings. That's compared with 20 times for consumer staples and 21 times for the S&P 500. But, you know, everyone needs their Clorox wipes.
Yeah, you can never get enough Clorox, that's for sure. Thank you so much to Scarlett Fu for that report on the markets. Well, let's talk about that big rally that President Trump had planned down in Tulsa over the weekend. He had the rally, it was Saturday, but he had about a little over 6,000 people in an arena that was set up for 19,000. They thought they were going to have overflow. They had quite the reverse. Let's bring in now Rick Davis. He's our political contributor at Bloomberg. He also is for Stone Court Capital. So, Rick, they really predicted they were going to be packed out and have overflow. The reverse happened. You don't want to have that happen if you're running a campaign, do you?
No, this is a pretty embarrassing moment for the Trump campaign, and this would be embarrassing for anybody's campaign if it had happened to them. Not only were they predicting a packed stadium, as you said, 19,000 people, but they had a big overflow crowd for almost double that. And that they went out on a limb and said they had over 1 million people sign up for the event. So they kept raising the stakes as the week progressed. And then last night, they were in full retreat mode, claiming that the K-pop supporters and TikTokers were, foiling their plans for an event, and basically in full retreat from this idea that Donald Trump fans and only Donald Trump fans were going to defy coronavirus and go to a rally when everybody else in the country seemed to think that was a pretty poor decision.
So, Rick, until now, it seemed like President Trump just was really pitch perfect in understanding his base and knowing what's going on. Has he lost some of that perfect pitch at the moment, at least? Because it seemed like people may be concerned about their safety. And more important, what about Arizona, Wisconsin? He's got some more rallies coming up.
Well, there is a big question right now as to whether those rallies are going to happen, right? I think there is pretty clear reporting around the fact that the campaign is in a bit of a disarray right now for exactly the reasons, David, you just mentioned, which is maybe they miscalculated the impact that coronavirus is having on their own supporters. As we know, Donald Trump's been all over the map, and including at the rally itself, saying all this is just going to go away. But in the meantime, as you point out, that the numbers are actually increasing in many states and overall in the nation itself. So the coronavirus continues to play an incredibly important role in this election cycle, and those who try to ignore it and move on are going to be at some peril.
So Brad Pascal is the campaign manager for President Trump. Is he in any trouble?
Well, we know that Donald Trump doesn't like to admit that that he's ever made any mistakes, and so this is all going to get blamed on the campaign. Who knows how much of it is going to be Brad Pascal's fault? But we've seen in the past some good reporting about the fact that there's been already a good amount of disarray associated with Brad Pascal's leadership of the campaign, including some concerns that the president had about how much money Brad Pascal was making off the campaign. If he can't deliver a full auditorium, which is primarily, outside of social media and television advertising, the only way Donald Trump campaigns, then I'd suggest that he would be in for some trouble.
But Rick, is this a larger issue potentially than just how many people you get to a rally? If even President Trump's core base is really worried about their safety in this world, what does that say for President Trump as he gets to November if things don't turn around, which could happen?
Yeah, there are a couple of different ways to look at it. One is it really takes away one of the only ways he campaigns, which are at these big rallies. So if he can't campaign that way, how is he going to keep his base excited? And there's a big question mark there. The campaign has not been willing to alter their plan for the general election, even though it's been delayed, which is these big rallies. Secondarily, I would also say there are tangential issues to coronavirus's impact on the election, not just people's willingness to attend rallies, but people's willingness to show up on Election Day and vote. And we know that there's a big move by states to include more mail-in ballot activity, which has been, by and large, well received by everybody as a way to accommodate people's interest in democracy. But Donald Trump's been dead set against it, tweeting out even last night that it's a danger to our campaigns and that it's going to be wrought with fraud if it happens. Of course, there have been mail-in campaigns since as long as there's been almost a democracy. And so not many people are taking it seriously. But if his supporters are the kinds that show up on Election Day and don't trust the mail, will they vote at all?
Wow, that's a big question. In the meantime, what could this mean for the issues that President Trump really wants to put to the fore? Obviously, he's now going after the Supreme Court after that decision involving the Civil Rights Act. And also, he now is going to rescind, apparently, cut back on H-1B visas, pushing back on the immigration button. Does he need to go back to some of those issues to maybe, frankly, distract us a bit?
It has been a little surprising, David, that he hasn't spent more time on immigration as a central campaign theme. It was almost the only thing he ran on in 2016, and we haven't heard much about it. Of course, the Supreme Court decision you mentioned has put in play the discussion a little bit more, and you can see that with his follow-up toward trying to limit H-1B visas. I would say, the H-1B visa debate usually was exempt from the typical immigration debate because these are the best and the brightest from around the world who actually want to add to the continuity and prosperity of the United States. Maybe it's a veiled attempt to deal with unemployment issues, which are continuing to haunt the administration as a result of the coronavirus. But you definitely see right now the campaign in a bit of disarray, both with the way they campaign around these rallies and the kinds of issues that they think they're going to talk about in the general election. And I would remind you that it's only 4 months to the election. The idea that there isn't a more focused campaign at this point is a little amazing for a party in power.
Yeah, indeed. Thank you so very much. It's always great to have Rick Davis with us. He's our Bloomberg political contributor. Coming up here in the meantime, we're going to have David McIntosh. He's the president of the Fund for Growth. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. President Trump came to office promising growth, which he did deliver for the first 3 years or so, and then we ran into this little thing called a pandemic. Welcome now David McIntosh. He is the president of Club for Growth. So welcome, David. Good to have you back. Give us your take now on what can be accomplished, particularly between now and the election in November, on the growth front in this country.
I think it's critical that we continue to see economies reopen, rehire employees, and build back, especially in the small business sector. That's going to be what determines whether or not we're able to do this. And we at the same time have to watch the reports on the coronavirus, right, to make sure that the curve stays flat as states reopen and counties and cities come back to normal. I think you're going to see a continued decline in the unemployment. You're going to see people gradually rehiring over the summer. To get back to really robust growth, which is what we'd like to see, I think it's going to take some further efforts at not fiscal stimulus, but probably some investment stimulus, letting people free up from some of the government constraints they have to operate under in order to have flexibility, as money's going to be redeployed, probably coming back into sectors that were shut down, and that will help get back to a more robust level.
As we watch this rather extraordinary recession, because it's self-imposed for good and sufficient reason, it's really hit disproportionately hard on the less fortunate among us, particularly African Americans and Hispanics. Even now, with the unemployment coming, employment coming back, it's hit blacks worse than it has hit others. Can we have that sort of growth and be inclusive of the entire population, or is it going to necessarily benefit some of those at the top?
I think when the growth returns, you're going to see those groups actually get a better benefit out of it because they were hit so hard, right? Typically, they're living in urban areas where the economic shutdown was more extreme and the threat of the coronavirus was more extreme. So it was a necessary, as you pointed out, step. But unfortunately, the minorities that live in the inner city and in the close-in suburbs, they lost their jobs first. And so one of the things that we have to make sure happens is that people that they turn to get jobs and be reemployed are able to reopen and restart. And then when that kicks in, when the urban and suburban areas are coming back to normal, then I think you'll see their unemployment rates also drop quickly.
So there's a sort of a debate going on, David, about equal distribution of economic goods on the one hand and growth on the other. Some people seem to think it is a trade-off, that if you're really going to maximize growth, you necessarily have to have increased inequality, which we have had now since the mid-'70s, early '80s. Other people think that actually, in order to get real growth, you need to have more equal distribution. What is right?
The best way to do it is to have unhindered competition. What I find is the disparity increases when you've got more government intervention, and it ends up people who have more money have more political power, and so they use the political process to benefit themselves. If you allow a greater degree of freedom and competition, then you're going to see the disadvantage have an opportunity to enter in. You see it. The common examples are folks who want to start their own small business. Well, if they have to deal with a lot of red tape and regulations that a big company can deal with, they hire lawyers, they get it done. But a small entrepreneur, somebody who's maybe just finished college, tries to open up a small business, that can be overwhelming. So what we've got to be careful about is not to block the opportunities for people to rise above where they're at. That's where you'll get more equality as people are rewarded for their successes.
David, you've been a student of this for some time, going back a ways, frankly. If you really look at history, do the facts really bear out your thesis? In this sense, the 1980s, under President Reagan, it was really a deregulatory time. Remember Alfred Kahn from Cornell, things like that. And yet, income inequality grew in the 1980s. Now, they continue to grow as regulation came back into vogue in the 90s and the 2000s. But is there an indication in history that, in fact, if you have less regulation, you will have a more equal distribution of economic goods?
The problem with that is that if you really want to get total equality, they always level down, right? So that's how you can get to equality. And so what you need to do is have opportunity so everybody can see an increase and be better off. And that's what happened in the Reagan era. John Kennedy expressed it really well when he said, a rising tide lifts all boats. And that should be our goal, not necessarily everybody being totally equal, because at that point, everybody is worse off.
So, David, President Trump has prided himself on really cutting back on regulations, just had an executive order in the last few days, further really deregulating things. Will this be an issue in the election, do you think? Is this something that President Trump can actually get votes on deregulation? It sounds, frankly, a little bit abstract, I think, to a lot of Americans.
Yeah, I think you're right, David. It's that nitty-gritty behind the scenes. It's necessary. It'll make a big difference of letting small businesses open up and rehire people. But it's not your political slogan you take out on the campaign trail. I think you're going to see other things dominate that, like law and order and a discussion about where we go from there. But it's absolutely necessary to hold back the red tape so that the economy can recover. And that is an election issue, right? People are going to ask themselves in November, okay, we just went through the coronavirus. We had to shut down our whole economy. Has the president got it back and running again? Or do we have a chance that next year is going to be better than last year? And if they can say yes to that, he's got a good chance to get reelected. If they see, no, we're still held back, people aren't allowed to open their business, we've got all this red tape and bureaucracy to deal with, I can't get a job, then people are going to be frustrated.
At the same time, David, is there some regulation that we can all agree is good and necessary and some that is bad and we should do away with? And let me give you a specific example. Given this pandemic, a lot of focus on workplace safety. Is this a time to really be dialing back on things like OSHA, the Occupational Safety and Health Administration, to really protect workers as they go back, particularly frontline workers as they go back to work?
I think what you need to do is look, there are two different types of regulation. There's the ones that actually set out a standard to keep people safe, and we need those, definitely. OSHA needs to be enforcing those. But they also have a lot of red tape and things that they'll go in and fine a business for not filling out the log exactly right. If you can give people a break on that and say, hey, we're not going to penalize you if you kept people safe and you tried your best to do all our paperwork, then you can actually see a better result. But you're right, some regulations that are needed for health and safety should be kept. What we found in the pandemic was some of those that were health and safety actually were holding us back. The famous one being the regulations against telemedicine across state lines. Well, when everything got shut down, that was the only way doctors could talk to their patients. So we had to remove that regulation so people could be treated.
Okay, David, it's always a treat to have you with us. Thank you so much. That's David McIntosh of the Club for Growth. And now it is time for Bloomberg First Word News. And for that, we go to Karina Mitchell. Karina?
David, thank you. A victory for President Trump at the Supreme Court. Justices rejected an industry challenge to the president's 25% tariffs on imported steel products. Some countries have negotiated deals to avoid those tariffs, but they're still in place for much of the world, including China, the European Union, and Japan. The global economy's fragile recovery is facing a fresh hurdle. A surge in coronavirus cases threatens to keep businesses closed and consumers on edge. According to the World Health Organization, cases of the deadly virus rose by a record for a single day yesterday. The biggest flare-ups took place in the U.S. and Brazil. And India is seeing a spike in new coronavirus cases. The country now has more than 425,000 cases and 13,000 deaths. Infections have been soaring, especially in rural areas where migrant workers fleeing big cities have returned in recent weeks. And this week in the UK, Prime Minister Boris Johnson will set out more lockdown easing plans. He'll outline which parts of the economy will be allowed to reopen in July. Johnson's also expected to relax social distancing rules. That would be a huge boost to the British leisure industry. Global news, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. David.
Thanks so much, Karina. Coming up next, our stock of the hour is Apple, as the App Store policies it has come under some scrutiny. At the same time, it holds its annual developers conference. That's next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and on radio. Well, the tensions between Silicon Valley and Washington may be heating up again. We now have Representative David Cicilline. He's head of the Antitrust Subcommittee in Congress, saying he would like to hear from the CEO of Apple and other big tech companies to talk about how they're handling things like the election and also dealing with third parties. We welcome now Kaylee Lines, who will take us through Apple in particular, our stock of the hour, particularly as today they're having their annual developers conference. Kaylee?
Yeah, that's exactly right, David. Today should be an exciting day for Apple. It kicks off its Worldwide Developers Conference. Of course, this year it's happening virtually, but it is an annual event. And some of the big things we're looking for are details on updates to iOS, its operating system, as well as a move to using its own processing chips in Mac computers, replacing Intel's. But there's this big shadow overhanging the event this year, David, and that's that amplified scrutiny surrounding its App Store policies and whether or not they're actually fair. The EU last week, of course, opening a formal antitrust investigation into Apple, specifically around the practice of the company charging a 30% cut on purchases made in-app on its system, which it kind of forced developers to do. And so the EU was looking at that, and that kind of created a flood of developers coming out and criticizing the company over these policies. And it's an issue, too, that has captured the attention of U.S. lawmakers. As you alluded to on Friday, our very own Emily Chang spoke to Representative Cicilline, the Democrat from Rhode Island. He chairs the House Antitrust Committee, and he had some very choice words on this App Store issue. We should be able to take a listen to that right now.
This is very concerning that the use of the App Store, developers who are startups are basically being forced to pay a ransom of 30%, or they are denied access to that marketplace. And, it's just coincidentally, Google and Apple arrive at the same thing, a third of the profit. And that sort of market power is very disturbing. If in fact it were done the way, in a competitive market, you might have a percentage as low as 2 or 3%, the way it is with credit cards. Even the credit card market is not really competitive, but it's still 2 or 3%. This is 30%. This is highway robbery.
So highway robbery, David, clearly a big overhang on this developers conference, especially considering that Apple needs support from its developers in order to make some of the changes it's going to talk about this week. That switch from Intel chips to its own processors in Mac computers, for example, requires developers change their programs in order to cooperate with that hardware. So Apple needs to keep these guys in their good graces here.
Yeah, Apple needs the developers, but the developers are making a fair amount of change as well off of Apple. I mean, it's really a symbiotic relationship, isn't it?
Yeah, that's absolutely right. I mean, if you're a developer, you look at Apple, which dominates the global smartphone market, for example, you kind of have no choice but to deal with the cost of doing business with this company if you want your apps to be seen. Now, for Apple's part, of course, they do get revenue from this as well. They made about $51 billion from these App Store commissions since they put them into place. But that said, it's still not really their bread and butter. That really comes from hardware. But again, you still need developers cooperating with you on that hardware front, David.
At the same time, quickly, Kaylee, does the market really react to any of this Washington threats against Apple?
Depends on the day. Today, that is not the case. You have tech leading the rally, and Apple is up about 2% today. But of course, a lot of that may be optimism around this WWDC.
Okay, thank you so much to Kayla Lyons for that report on Apple and their issues with their App Store. Coming up here, the virus does get a vote. We're going to be joined by Dr. Michael Kinch of Washington University to talk about whether we should be concerned or how concerned we should be with the spike in virus cases in places like Texas and California and in Florida. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and on radio. I'm David Weston. Well, New York City takes a big step toward opening up today, even as the number of COVID-19 cases is spiking up in some places like Florida and Texas and Arizona. To get a read on whether we really have our arms around this disease, we welcome now Michael Kinch. He's Associate Chancellor and Professor of Biochemistry and Molecular Biophysics at Washington University in St. Louis. He also, very importantly, the author of Between Hope and Fear, The History of Vaccines and Human Immunity. So, Dr. Kinch, thank you so much for being with us. Give us a sense about how you read this spike up in cases. The absolute numbers still are not that high, but the direction seems to be disturbing in Florida, in Texas, in Arizona. Are we in for trouble?
We are, unfortunately, and it looks like we are still, people keep talking about the second wave. We're still riding the first wave. It's just that wave is now hitting places that it had not hit so hard before. So the second wave probably isn't going to come in until fall. And the fact that our numbers are now nearing their peaks in March and April is not a very good sign, unfortunately.
Was the shutdown effective, or were there other ways we could have gotten to a similar result through social distancing and use of masks and things like that?
I think the evidence shows that the shutdown was very effective. The problem is that we have become very impatient, and understandably so. I mean, we've all been cooped up for months now, and I think that urge to get outside, especially as the weather became nicer, has revealed itself in this reverse in the trends. Now, one positive thing is that we're not yet seeing a rise in deaths. And so that's a suggestion that the therapeutic attempts to subvert this disease are starting to work.
So give us a sense about what the right way to prepare, besides getting enough protective equipment together, getting ventilators and things like that. What's the right way to prepare for a possible surge here? We have two different approaches. One is a vaccine that will essentially create immunity. That's what you wrote your book on. Another is treatment, to palliative treatment, to really protect people from getting more severe versions. The administration right now apparently is backing vaccine, perhaps the exclusion of treatment. What should we be doing?
We need to really have a balanced portfolio, just as any investor would know. And that balanced portfolio, unfortunately, is something that, from my perspective, is completely lacking right now. We are placing a lot of emphasis upon vaccines, and that's great in the long run. And I am a big proponent of vaccines, but there are a couple of risks. One is that this disease might not be vaccinable. It may be that we can't develop a vaccine. There's no evidence of that. But we have to be prepared for that possibility. The other thing, and I've commented about this a few times now, is that we are putting really all of our eggs in one basket, in that the type of vaccine that we're going after is very much, most of the companies in Europe and the United States are attacking what's known as the spike protein with a vaccine, with the idea of blocking the ability of the virus to infect cells. Other countries, and specifically China, are looking at killed vaccine, which historically has a much better success rate. And I think the real danger that we're looking at is that our portfolio is not balanced at all. We should have more inactivated vaccines and fewer whiz-bang technologies that are going after, like these RNA and DNA vaccines. And I'm afraid that we're not, as a society, looking at the portfolio as broadly as we should.
So you make a really powerful point that I suspect people won't want to hear, which is there are some diseases that perhaps you can't get a vaccine for. You worked on HIV, for example, early on. We never did get a vaccine for HIV, did we?
We did not. And what we ended up having to do was we instead balanced our portfolio and said, let's go after therapeutics that work, that are in the existing set of drugs available to us. What's known as drug repurposing. And that's what we're doing early on with COVID. And then we started to develop drugs that were specific for COVID and that would be even better than that first generation. And that's, again, where we have to have a fully balanced portfolio, both overall comparing vaccines with therapeutics, but then also within the vaccines having different approaches that we use.
We've talked about this before, but give us an update. What do you think the likely time horizon before we know whether we can get a vaccine is or not?
So it's likely that the yes-no answer will be available probably at the end of the year or midway, sometime between, let's say, December and June. That'll be when we know that we can develop a vaccine. Then the question is going to come to scaling that up and being able to deliver it. And, again, when we're talking about giving a vaccine out, we have to have the infrastructure available to not just have the vaccine, but to have all the vials and all the stoppers and all the syringes. And I haven't really heard as much conversation about that, the logistics, the fundamental logistics of how you both make the vaccine and distribute it. And that would probably, I can't imagine being into full effect until or before early next summer, perhaps a year after that.
So I'm going to take advantage of the fact that we have an historian in one sense of vaccines. I have read now in 1957 there was actually an epidemic. And in fact, we developed a vaccine right quick, as I understand it, and got it really particularly administered to the military. What happened there? Why is that different from this time?
That is a little bit different because that was a variation on the influenza virus vaccine. So the 57 outbreak was an outbreak of influenza. It was just a pandemic strain. Now, here we're not talking about modifying an existing flu vaccine. We're talking about having to develop a brand new type of vaccine for a brand new type of virus.
So if you were advising the President of the United States right now, besides having a balanced portfolio, as you described it, pursuing both treatment and vaccine at the same time, what advice would you be giving about really trying to keep down that transmission rate? As I understand that R number is critical. You want to keep it under 1 if you can. You start getting much over 1, you got a problem.
Yeah, I think what we really need to do is we need to think about hyper-localized reactions. And what I mean by that is you don't have to necessarily shut down the entire nation, but in areas where there are bad outbreaks, where the curve is starting to move upwards again, we need to have the ability to clamp down on that. And that's going to extend beyond presidential power. That's going to require governors to be on board, mayors to be on board. And so I think that we really need to not think nationally, but we need to think locally with all of these outbreaks and quashing them one at a time. We're really playing whack-a-mole right now.
Okay, thank you so much. It's really great to have you with us. That's Michael Kinch. He is Associate of Chancellor and Professor of Biochemistry at Washington University, and he's also the author, as I said, of the great book, Between Hope and Fear, A History of the Vaccine and Human Immunity. And now it's time for Bloomberg First Word News, and for that we go to Karina Mitchell. Karina?
Okay, David, thank you. While the race for a vaccine is on here in New York City, as you know, phase 2 of the reopening has begun. Office workers can return to their desks after 3 months of lockdown. Many will still be working from home, however. Companies are taking it slow while they're figuring out the safety issues. Meanwhile, New Yorkers also can eat at restaurants again, but only at outdoor tables. Meanwhile, in Florida, the coronavirus pandemic is showing no signs of slowing down. The state now has more than 100,000 confirmed cases and nearly 3,200 deaths. Florida has had nearly 23,000 new cases in just the past 7 days, the highest level ever. And Greece's travel industry came to an almost complete standstill in April. The Bank of Greece says travel receipts stood at just 7 million euros in April, compared with 544 million euros in the same month last year. That's a drop of almost 99%. Greece's economy depends heavily on tourism. After an early lockdown imposed in early March kept coronavirus deaths and serious illnesses at low levels, the country is now reopening to visitors from overseas. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. David.
Thank you so much, Karina. Well, Bloomberg Invest is going on today, tomorrow, and Wednesday. We're going to have some of the top leading voices in the finance world. And today, we're going to hear from Steve Schwartzman as well as Jim Chanos. That's coming up on Bloomberg Invest, and we'll bring it to you here on Bloomberg Television and on radio. This is Balance of Power. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Angel Gurria, he is the OECD Secretary General, talked earlier today to my colleague Francine Lacqua about what a recovery would look like after COVID-19.
You're going to have a third quarter that is going to be stronger than the second quarter. The second quarter is going to be like the trough. So there's going to be some progress. It's going to look like there is recovery, and there's going to be some expectation, there's going to be some enthusiasm. The only question is that it's going to be a longer slog overall. Why? I believe it's going to be more like a U. And the question is, how long is the bottom part of the U? Why? Because among other things, there's going to be more government debt, there's going to be more corporate debt, there's going to be more household debt. We're going to need a longer runway to take off. In order to reduce to the greatest possible extent the costs, the consequences, the economic and financial consequences of the virus itself, of the health pandemic, and at the same time, because it will allow you to then set the stage for the recovery in the medium and the long term. Now, but you also mentioned other questions. Confidence, that's very important. The recovery of confidence will not happen immediately. Then the question of investments. How long will investments take? We already had, remember, Francine, you and I talked several times, we already had a very high cost for the world economy because of the trade tensions. And we were paying in uncertainty, and the uncertainty was generating lack of investment, and the lack of investment was killing growth. That's before the COVID, and then came the COVID. So that has not moved. In fact, One of the things that was not done is to say, okay, let's remove the trade restrictions. Let's remove the trade tensions. The cooperative spirit of saying, what can we do together in order to create more confidence? Everybody focused on their own country. Everybody focused on the trillions and trillions and trillions and the billions and hundreds of billions that were throwing at their own economy, at their own unemployed. That is fine. But the more mutually reinforcing measures and some confidence building measures like the removal of some of the trade restrictions would have been very important. And then you mentioned some sectors which are.
That was Angel Gurria. He is the OECD Secretary General, speaking earlier today to Bloomberg Television. In the meantime, we had a bit of a drama over the weekend. The Attorney General tried to replace the U.S. Attorney for the Southern District of New York, Mr. Berman. And unfortunately, he didn't tell him that he was losing his job, and so he ran into a bit of difficulty. We welcome now Greg Farrell, who's an investigative reporter for Bloomberg, really covers the Southern District of New York. So it's a little embarrassing. He's trying to get Jay Clayton, the head of the SEC, in. He hadn't mentioned to Mr. Berman he was out of a job. Greg.
Yes, that's right. Everybody knows the broad brush facts of the story that you just outlined. But the weird thing is that Barr made an announcement Friday that Berman had resigned, and that was factually incorrect. That's not a good look for the Attorney General of the United States. And he'd been battling, back and forth with accounts of what happened in Lafayette Square a few weeks earlier. It's just the way this was handled. Even if there's, no suspicion about what's going on or whether there's any kind of cover-up, it's just, a badly handled bungling of, a replacement of the U.S. Attorney in the Southern District.
Well, it's interesting. There are certainly some sensitive issues pending before the U.S. Attorney in the Southern District of New York, and one might jump to the conclusion, as perhaps some Democrats are, that really this has to do with politics. On the other hand, the word out of the White House is no, he's just like a golfing buddy of the president's, Jay Clayton, who's done a terrific job as SEC chair, in my view at least.
Yes, well, there's a couple of things going on here. One is that, yes, the Southern District of New York, under Berman, who is not only a Trump appointee, who was never confirmed by the Senate, but a Trump appointee who met with Trump as part of the interview process. And that caused a lot of people to be concerned about whether Berman himself 3 years ago would be able to be independent. And he certainly has. He recused himself from, certain investigations, particularly one into Michael Cohen, Trump's lawyer, who's convicted of, campaign finance violations on behalf of Trump. So there's that. There's an investigation that involves a couple of pals of Rudy Giuliani's that's there. There's a number of other things that are just below the surface. So, that's it's easy enough for congressmen Democrats to glom onto that and assume that there's some kind of a cover-up going on. On the other hand, Clayton, yes, very in an administration which has had lots of turmoil throughout many different departments. Clayton has been a bit of a breath of fresh air. Someone who's been non-controversial. He's well regarded. The job he's done at the SEC. The problem now is with his name in the mix for this. It looks like if you take a negative view of it, that he's being set up to be brought in to oversee an office with the conspiracy theory is that so that nothing bad will happen to the president, and it's almost like he's cast in that position now. It's almost a poison chalice. Even if it went ahead and his name was submitted to the Senate, he'd have difficulty getting confirmed this fall during an election season, and then B, it already looks tainted. So that's kind of an unfortunate byproduct of this, is that Jay Clayton ends up being thrust in this position where something that might have been a nice promotion or appointment for him now has a very different, public relations meaning, if you know what I mean.
Yeah, that's a tough job no matter what, but going into it under those circumstances really could be challenging. Thank you so much to Bloomberg's Greg Farrell. Coming up here, the United States and Russia are going to be back at the bargaining table in Vienna this week over arms negotiations. We welcome the former ambassador to Russia, Thomas Pickering. That's next. This is Balance of Power on Bloomberg Television and on radio. This This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Russia and the United States returned to the bargaining table in Vienna this week to talk about arms control, something they haven't talked about in a while. To get a perspective on what we might expect, welcome now Ambassador Thomas Pickering. Mr. Pickering has been ambassador to the United Nations, to Russia, to India, to Israel, among other countries. And he also holds the rank of career ambassador, which is the highest rank in the U.S. Foreign Service. So, Mr. Ambassador, thank you so much for being with us. Set the table for it, as it were. What is on the agenda for this negotiation, and what realistically can the United States expect to accomplish in these negotiations?
Thank you, David. Most logically, and the most important event on the agenda has to be whether, in fact, the U.S. will go along with a very deep Russian interest in extending for another 5 years a very important agreement called New START, which sets overall limits on the number of delivery vehicles that each side can have in the nuclear equation between them. It's a treaty which is based on a tough negotiation, very favorable inspection arrangements for the United States. Were it to go, we would see the disappearance of the last arrangement coming through and beyond the Cold War to provide those elements of stability in U.S.-Russian nuclear relations, clearly very badly needed, in large measure as a result of how close we came to misuse of nuclear weapons, if I can phrase it that way, back in 1992 on Cuba, where Khrushchev sent nuclear weapons and delivery vehicles to Cuba. It was a harrowing and very challenging experience, and one that almost all of us who think very clearly, I hope, about U.S.-Russian relations would not like to see repeated. So there is an opportunity to renew. Mr. Putin has said he's ready to do so with no preconditions for another 5 years. It is an important way for the president to chalk up a win if he is interested in a win. The real problem, of course, is that this was an agreement reached under Mr. Obama, and as a result carries that burden, if I could phrase it that way, with the president, who doesn't seem to be interested in building on anything that's out there that was put in place by somebody like Mr. Obama. A really unfortunate approach to the question of strategic stability, something that we all ought to be interested in, even in the midst of the COVID virus, which has sort of sucked most of the ether out of a discussion of other issues.
Mr. Ambassador, it's not just a matter of reluctance to build upon, but also to take away from. I mean, there's a history here between President Trump and President Putin involving the Intermediate Range Nuclear Forces Treaty, where the United States pulled out of that. That's not a very pretty one. Are those two just entirely separate, or could the one spill over into the other?
The two are entirely separate. On the other hand, one, and what we do about it, the INF Treaty, the Intermediate Nuclear Forces Treaty, it covers delivery vehicles between 500 and 5,000 kilometers range for nuclear weapons, was going to be a test case. Could we continue it or not? In that treaty, each side argued that the other side was violating it. And most of us who spent time thinking about it saw there was a path through those particular questions, including changes in posture in places where violations were either charged or where they could be dispelled by changes in posture on both sides. The New START agreement doesn't require any of that. It is merely a treaty that's working very well, that provides us a great deal of reassurance about the Russian nuclear posture, and something in the absence of it, our generals who are in charge of the
Sorry, we're having some technical difficulties there. Let's see if we can get Ambassador Pickering back. Right, this is a digital breakup here that we're listening to. We'll see if we can get Ambassador Pickering here. We'll see if we can get Ambassador Pickering back. I apologize. We have certain digital challenges working from home here, but that Ambassador Thomas Pickering, who really knows international negotiations, particularly arms negotiations, one of the questions beyond the relationship between the United States and Russia is also, does China need to be brought in it? Let's be frank, the START Treaty was enacted at a time in a different world than we have right now, where we have China, a resurgent of China really moving forward, not just in trade, not just economically, but also geopolitically in the South China Sea and elsewhere, and has a significant nuclear arsenal itself. And so one of the questions is, can they really, the parties, come together in Vienna, just Russia and the United States, without China having some role at the table? Something that has been suggested in the past is necessary. There's a whole range of issues now facing President Trump as we look toward the November elections. And certainly some of them are foreign policy, not just with the nuclear arms limitation talks in Vienna, but also, of course, with China more generally, the South China Sea that I mentioned. Also, North Korea, a very difficult, challenging situation that President Trump thought he was moving forward on, although it appears that he's not making progress right now. Kim Jong-un is actually, if anything, getting more and more belligerent toward the United States. We certainly haven't approached the direction that President Trump really long sought, which was really have them denuclearize the Korean Peninsula. So a lot of foreign policy issues as well as domestic issues that President Trump is confronting, and we'll see the extent to which that really affects the election. That does it for the first hour of Balance of Power. We'll continue on in the second hour on radio. This is Bloomberg.